Cardia Cephas from the Tax Administration Education Unit. Um, if she's online, no one can hear me. Can she just say hi, hello, so I can confirm that she's here and well?
Good morning.
Okay, great, great, great. All right, so this morning's information session will be brought to you from the Tax Education Unit, specifically the St. Andrew Revenue Service Center. And this unit came about, I think, back in April 2012, if I remember from the previous sessions. And it's really about establishing a unit that can use to educate officers and managers and entrepreneurs about the whole setup of the tax system in Jamaica. Um, the unit is really about educating the public, essentially, right? So increase their levels of awareness in terms of the tax compliance, right? And in executing this mandate, and they have different programs. You have a school tax education program. Them have sessions like this. We actually come on and partner with us. There are different seminars, online sessions, and so forth. All right. The unit itself is headed by Miss Dart Lopez and Miss, like I said, Cardia Cephas, and she can correct me if I'm pronouncing her name wrong, will be the one instructing us today. Miss Cephas is a graduate of the University of the West Indies, and she holds a master's in education, leadership, and management. She has a bachelor's in Spanish, okay, and a postgraduate diploma in modern language and education, right? And she have about 15 years experience in the field, so we're in very, very good hands, right? So she will take over the session now and inform us about the ins and out of the tax administration of Jamaica, and come prepared to ask your questions because you can hear it from the horse's mouth today. All right, Miss Cephas, you can go ahead.
Thank you. Thank you. Good morning, everyone. And today I'll be sharing with you in regards to taxation and entrepreneurs. What are the do's and the don'ts? How
And
you start on the correct footing of being compliant and actually remain compliant in your process.
and everyone, please make her feel welcome. All right. So Matthew, Mr. Abbey, Mr. Shana, you can make sure know that she's welcome. All right.
Blessed morning,
Wel-
Miss Cardia.
Say that again.
Right.
Good morning.
Welcome, Miss Tifa. Happy to have you. Was
Oh,
looking
just
forward to this
welcome her.
session.
Okay.
Mhm.
Thank you. All right. So I hope this session is not one that I'm going to be just speaking to you because I'm not exactly in front of you where we can have probably and face-to-face discussion. But feel free to stop me if at any point you need clarification or if you choose to keep your questions at the end of the presentation, that is fine. All right. So, but I should ask, everyone seeing my screen? Are you able to see my presentation?
Yes, Miss.
Okay, thank you. Good. All right. So today I'm going to present to you basic information in regards to starting and operating your business. So whether you have engaged in entrepreneurship, if it's in a matter of you being employed as well, or if you are earning multiple sources of income, information is geared towards you today. All right. All right. So first, if you are engaging in any entrepreneurship, whether you will be registering a limited liability entity or a sole proprietorship, the first option for you is to start with the Companies Office of Jamaica. So that's where you have to register your business. Now, at the Companies Office, we have made changes over the years. Changes have been made in terms of being more compliant and convenient to customers also. So this one form, which is called a super form, what is now called for you to register. And at point of registration, you will be given the name of your business, the TRN, your NHT, you'll be registered for NHT for heart. And you, for limited liability entities, you can apply for your TCC first at that point. You will be also registered with NIS. So this is a one-stop shop. Back then when you had to move to different entities, when you registered Companies Office, and then you had to move to HART, then to NHD, then to NIS to do the registration of your business. So now it's a one-stop shop. Taxpayer registration, we continue. So for all individuals, business enterprises, and other types of organizations, they're required to have a TRN or tax registration number. What the TRN does is allows you to do transactions with tax administration and other entities, not just government entities, but other entities. So for individuals, if you are engaging in a sole proprietorship, when you do your registration at the Companies Office, your TRN will be upgraded with a branch added to it. So it will be your TRN with a /001, 002, and it depends on the number of businesses that you are registering. For companies, partnerships, and other organizations, these entities, once registered, will be given their own TRN. And now we start at 0. So it still starts at 0 for the other entities. And if you would be registering your main branch along with the other branches, then once you would have been given that TRN, then the other branches will be added. So the branches would exist if you have, say, other branches in different areas, say Spanish Town, Maypen, Lucy. So the branches will be differentiated also. NHT and HART. For self-employed persons, in terms of registration, persons will be registered to make contributions to NIS and NHT, and this happens when they file their income tax returns. They file your income tax returns by filing the S04 or what is called the SO4. So that is another amalgamated form. From 2011, we have been using this form. So this is another form that we have been amalgamated so you can actually pay all your deductions, your taxes, and contributions. So that is a form of registration for sole proprietorship. In terms of HART, only employers are required to pay HART contributions. And HART contributions is 3% of the gross taxable payroll if it exceeds $14,444 per month. And in this time and age, we know that there's no payroll that is going to be less than that per month, because we even know that the minimum wage has moved to 15,000 per week. No, so we know that persons, if you are sole proprietor, you can be a sole proprietor too, and also have employees. Once you have employees, then you will be required to do your HART contributions as well. What is tax compliance? And it is a degree to which a taxpayer complies with Jamaica's tax laws. And the foundation of this is filing and paying on time. So you make your declaration in regards to your fair share of income and expenses declared, then the calculations for your taxes and contributions will be made. Then you pay your fair share. So the compliance rate is that filing on time, paying on time. If there's any difficulty, then you speak with us at Tax Administration Jamaica. All right. So once you actually know what your requirement is, if you know what your requirement is, when you register your business, then I know it will actually give you more knowledge to make more informed decisions in regards to your business. A tax compliance certificate needed for transaction with government entities and other entities such as Jamaica Customs. So when you're making your clearance there, once you're clearing, you're making your clearance of imports. If you are bidding for contracts with the National Contracts Commission, if you are bidding for other government contracts, you are engaging the lending agency to obtain grants and loans, and for other entities, and for other, the tax compliance certificate now is needed even for different reasons, because you may have a contract and you may need to be paid. Some of the contractors may ask you for your tax compliance to show that you're compliant when they're even making payments to you. So it has actually moved, not just to lending agencies, but to other areas, right? Once you are registered, when you are registered to carry on a trade or a business, and what is called a trade license. So from the trade and business license, you will be expected to register once you're in the business of wholesaling and retailing and other specified group mentioned in the trade license business. So, but the main focus of it is retailing and wholesaling. And you must apply for that trade license at the collectorate or the tax office within the parish which the trade is being carried on. It is much easier now. It is much easier because you don't have to go to, just a minute, please. All right, so what you can do, it is easier now because once you have registered online, you will be able to apply for it online. So you can just apply for that registration online. And once you complete the requirements, then you'll be able to see how much you are to pay for the year. And for the trade license, it's normally within the financial year. So from the 1st of April all the way to March 31st. Go ahead, is this Miss Tanita?
Yes,
have
miss. Thank you so much. So the trade license, right? Say per
Yes.
se, I do own a funeral service and supplies business, right? And I want to sell supplies. I want to, carry on the work of supplies to other funeral homes. Do I need to apply for the trade license for that side of the business?
Yeah, because you would be in the business of retailing.
All
because
right,
you're going to
miss.
sell the supplies.
All right,
right?
thank you.
All right, but if it's just funeral services that you're offering only, then that is different.
Understood. Thank you.
You're welcome. All right, move on again. What every entrepreneur should know: first, business taxes and fees. Second, tax compliance. Record keeping. Your rights and obligations. And we know that for in every situation or within every different sphere, each person have a right and an obligation. If you go to the bank, you have a right and obligation. If you're in private sector, public sector, you have a right and obligation. So even in taxes, you do have your rights and your obligations. Our system that we operate here in Jamaica is called a self-assessed tax system. What does this do? It gives you greater control over your tax affairs, meaning that you have the ability to calculate, file, and pay your taxes at the specific time set by the revenue authorities. So when you actually hear us advertising and reminding you to file by March 15 and pay your requisite taxes, the 15th of March would have been one of our due dates for income tax returns along with the payments. So those would have been dates that are specified by the Revenue Authority, and it is a date for each and every one of us to comply once you're an entrepreneur. What it does in terms of it, and it gets easier because you just file online anytime, anywhere. And the form, the way that the return is programmed, the way it has been implemented, it is implemented only for you to just make your declaration for your income and any business related expenses. And then the calculation is done in the back for you. So you realize that when you complete your form, you realize that you see how much you're to pay for income tax, how much to pay for NIS, MHT, those contribution, and education tax, which is another tax. So the form is embedded with the formulas to do the calculation for you. So it is much easier, but then we still give you the information in regards to what rates you are looking at. So you have a better understanding and having that greater control over your tax affairs. Where the individual fails to file his or her return, then, the commissioner is empowered to raise estimates within that return. And it is mainly done for GCT. And when I touch GCT, then I'll explain a little more for you. But then the commissioner reserves the right because he's empowered to raise estimates whether a taxpayer fails to file. All right. We have different tax types. So we look at income tax and we look at it being categorized as personal income tax. Then that would be for sole proprietorship. So persons who are filing their S04, IT05, those would have been the personal income tax versus corporate income tax are for limited liability and other entities. Pay as you earn would have been the income tax that is deducted from your salary, and that is for persons who are employed. So those would have been categorized as the different categories of income tax. Education tax, property tax, guest accommodation room tax, or the acronym GARD, which is associated to accommodation. So for hotels and other guest accommodation, they would actually file and pay their guest accommodation room tax monthly. GCT, general consumption tax, and it's down to the consumer level. And persons who actually file and pay GCT would have been empowered by registration, and that is through the Commissioner General, and you're just empowered to collect on behalf of tax administration and remit the same, right? Special consumption tax, SCT, that's a tax levied on petroleum and tobacco spirits. So that is SCT. And this is mainly people if you have like a gas station, if you are running spirit distillery, so forth, the special consumption tax is added. Assets tax, that's the tax levied on assets. It has been repealed for the unregulated entities. So the category now who actually pays asset tax would only be regulated companies. And those would have been the big companies like OUR, FSC, BOJ, those companies that regularize other entities under them that they are operating. So those persons pay assets tax. What is income tax though? The income tax is a tax on all sources of income, whether it be from employment or business, whether you're earning it from rental or from other investments. And that's how the income tax is calculated. So once you are earning an income and you're earning the income over the income tax threshold, then the tax that is going to be deducted is income tax, right? Who pays income tax? So we have both residents and non-residents that actually pay income tax. So for residents, the tax is payable on worldwide income. So we're all Jamaicans and we know we have been trying to invest, trying to spread the money a little bit so we can earn some more. So even if we have so we have some investments overseas and we have investments, say, in other countries. We're talking about like rental and other investments. The income tax, we're to file our return and declare our income from on the worldwide income. So we could be operating rental. We could have a nice property in Florida and one in Georgia and another one somewhere else. And we are renting it. We're to ensure that we file our return and declare the income, right? For non-residents, it's taxable on the income earned in relation to the island if he or she is here for more than 3 months. So we know that persons actually, we have a lot of persons coming down on contracts to work in Jamaica. I know this beautiful island that we live in, it is an island for investment. So we know persons are actually coming here. So when they do come here for work, once they're going to be here for more than 3 months, then the taxes will be calculated. So they have to pay income tax as well.
One question.
Okay.
What if the business is registered overseas and you still do business in Jamaica, but you don't stay for 3 months' time? You come
What
and
are you?
maybe
All
have a
right.
project that you were hired to come and do, or something like that, and you just come for maybe a week, 2 week, or so. Less than 3 months.
Less than 3 months.
Right?
Okay.
Where you come event, sell merchandise, or even do promotional stuff for a local company, but you don't stay for 3 months. And the business
So you're talking about the non-residents, right?
Non-residents, yes.
Okay, so for the non-residents who once they are here for less than 3 months, if they're just coming just to do an event for the person here, then they are not going to pay the income tax because they are going to make their declaration within their country. So they will have to file to say that they earn this amount outside of their country and pay their taxes within their jurisdiction.
Understood.
Okay. So we're looking at we continue with the income tax now. So there's no age limit on the income tax that you pay. However, you have some benefits that when you reach a certain age and if you're earning a specified income, then you get some exemption. So when we're looking at 2024, where we had a little calculation in regards to how the income tax threshold works. So we know we had the income tax threshold change last year, which was effected 1st of April, where it had moved from 1.5 million and $96 to 1.7 and 88. But we have an average for last year, which is 1.6, 50 and $90. So this means that once you earn over that amount, whether it's by employment or self-employed, then the income tax is going to be calculated on the balance. And for persons earning persons who are over the age of 65 and they are still earning, they get an additional exemption of $207,530 last year. And if you're also earning pension, you would have been earned additional exemption of $207,530. So if you're looking at someone who is a pensioner, being over the age of 65 and is still earning, then the exemption that you'll be looking at that 207 times 2 plus the income tax threshold. So I guess we'll be looking at something a little bit over 2 million for them in regards to how the income tax is going to be calculated. So they would have that, say, as a income tax with the tax-free portion along with the exempted amount. So all of that becomes tax-free. Then the additional is taxed at 25%. And it's a registration for this tax type is implicit. So looking on that, for persons, if they are pensioners and their source is still withholding that income tax, then they apply for a refund and also apply for the exemption to be taken to that institution. Right, so we have going forward the 2025, going forward into 2025, the January to December. So our new income tax threshold is $1.7 million and $88 until it is changed. It's broken down weekly, fortnightly, monthly. So weekly $32,694, fortnightly $65,388, and monthly $141,674. It means that once your weekly, monthly, or fortnightly income is above these amounts, then income tax will be calculated. We look at how the taxpayers, the different taxpayers that we have, companies, individuals, employees, pensioners, how the income tax. So the income tax is calculated for companies on the profit tax, individuals, profit tax, employees, PAYE, and that pay as you earn, and for pensioners, PAYE as well. So for companies, 33.33% of the net income, and that's for regulated entities, unregulated entities, and that is the unregulated entity. You are not governed by any authority in terms of how you operate, right? So you don't fall under BOJ or FSC or OUR.
Okay.
So
and just to clarify, there isn't a board that oversees the operation, and that's for the unregulated company, correct?
No, it's not really a board that really. No, when there's a body that oversees regulates your engagements or your operation, that is called the regulated entities. But for the unregulated entity, that's like you just say, all right, I have a company, I'm going to just register it at company's office. So you operate within your own ambit, you set your own whatever in terms of how you operate.
Okay.
So you don't have to seek any guidance from any authority to say that I cannot increase my sales by X amount. I have to stay because. So you are not regulated by any entity. So you operate on your own.
Right. Thank you, Miss.
You're welcome. The trading year, we expect you to file within the trading year. And that is from January 1st to December 31st of each year. There are some entities that would be register within the year and expects to keep their anniversary date. Sometimes if you want to keep your anniversary date in terms of filing the return as per anniversary date, then there's something that you would be required to do, and that is applying for a permitted accounting period. So if you apply for a permitted accounting period and it is granted by Tax Administration Jamaica, then you can file for your anniversary. Other than that, you just fall in line with the year of assessment, which is January to December each year. File on the IT02 due on or before March 15th, and it is mandated online. So all returns are mandated for online filing. We jump over to individuals. The income tax is calculated on the profit and what is called a statutory income in terms of the rates. So we have the calculation being 25% of when you have the net income, take off the NIS that you pay during the year, the nil rate, or what is called the income tax threshold. So you may hear these terms being interchanged. Nil rate and threshold means one and the same, right? Approved pension contribution. So if you are contributing to an approved pension, you actually get the benefit as well. So for self-employed persons, you may be contributing to your approved pension scheme, whether it is a retirement scheme or not a pension scheme. Once it is approved, you can declare that on your income tax return. So then it will actually lessen the amount that you pay, right? 25%, and 25% is up to 6 million. If you earn over 6 million as the statutory income, then 30% will be taxed on the excess, and that is over 6 million. File within the calendar year, January 1st to December 31st, file on the S04, due on or before March 15th. Employees pay as you earn. So, it's on a monthly calculation that your employer will do your deductions and then pay over to us at Tax Administration, especially on or before the 14th of the following month. So this is done through salary, and the calculation would have been your gross salary minus the income tax threshold or the nil rate, take off the NIS or any approved pension contribution. For the annual return, the employer files the S02 that declares the total amount that they would have paid you for the year and all the contribution and deductions that are made. Is due on or before March 31st. For pensioners, they are still considered as PAYE because the deductions are made, and they would have gotten the exemption in terms of the added benefits. So your exemption for being in receipt of pension income, or if you are over the age of 65, so you'd earn both exemption, pension and age exemption, along with your income tax threshold. And if you are making any contributions still, like to NIS, if you're still making your contribution, then we take off those before the income tax is being calculated. Files as per calendar year, and the return is IT05, and it's due on or before March 15th. Outside of this, you may not have any penalties or associated with IT05 in some circumstances. If it's a refund, then this is the return that you have to file on, IT-05. You may not be charged even if you file it anytime within the year. But what if the return works out to be a payable? Say you have to pay the added income tax. Say when the calculation is done, there's some income tax amount that you have to pay. Then the only thing, if once you don't file by March 15, then you will have interest accumulating on that amount. And that is the reason for us actually allowing persons to file by March 15 for the IT-05. And this one is not, this return is not a return that has to be filed. It is only filed in certain circumstances, right? All right, so we're gonna take a look at how the calculations are done now, because I know that some persons, I know that when you are calculating your salary, sometimes you don't even know how your salary is calculated. You just say, okay, just let me check and see if I get my salary. Okay, yes, I get my salary, and that's good. But sometimes if there's an error, we are not even sure. So then I'm going to run through this so you can actually take a little note so you can check back on your pay slip to say, yes, I'm getting my pay correctly with that. All right, so when you're employed, so we have a section for the different tax type and contributions. A column for employee contribution, one for employer, and the basis of the calculation. So for NIS, so for the first column that asks for the employee, that is what should be deducted from your salary. The third column for the employer contribution would have been what your employer contributes on your behalf. And then we see the basis of how it's calculated. All right. So NIS 3% of your salary, then your employer adds another 3%, which is paid over to us. And that is from your gross emoluments, right? So your gross salary. NHT 2% is paid, is deducted from your employee. Your employer adds 3%, so a total of 5% is calculated from the gross emoluments and paid over to us. Education tax, 2.25%, and that's of the statutory income. This means that it would have been your gross income minus the NIS paid. Then you find 2.25% of that. That's from the employee. Then the employer adds a 3.5%, and 5.75% is paid over to TAJ of the statutory income. PAY or income tax, the 25% is calculated only from the employee, and it is paid all the way over to us. So once it's deducted from your salary, it pays over to TAJ. There's no added contribution from the employer. And that would have been the income tax. You take off the threshold and your other allowable deduction like your NIS and pension contribution. HART is only paid by the employer. So, and that is from the gross payroll. Once the annual amount exceeds $173,328, then that's how the 3% will be calculated. Probably you may look at some, I'm not sure if you probably be privy, but if you're in the, say you are running a training institution, which is an educational institution, once you would have gotten that approval from Ministry of Education to say that your entity is operating as an educational institution, then you would be exempted from paying over that 3% for HART. How do we calculate the payroll taxes and contributions? So we have an example here in regards to, we have a little example. Say Mr. Mullins Miss Mullins actually gets 180,000 per month for her salary. Her approved pension contribution is 10,000. We look at the yearly threshold, the monthly, the fortnightly, weekly. So we're gonna do the calculation as per month, right? So we're gonna look on that, which will be using the income tax threshold of $141,674 to see how much, what is calculated and how much it goes home with. All right, so I have this little exercise, but I'm going to, I won't actually be where you are now to actually allow you to do the calculation. So let me just move to the next slide and we explain our calculation, right? Or do you want me to allow you to do the calculation? You can tell me now.
Well, explain, man. Give us another one to do.
All right, okay, all right. Your escape, Miss Mullins. All right, your escape for today. All right. So this is our calculation goes. So 180,000. So what was given was the 10,000 pension contribution. So that was a given. So we find 3% for your NIS, and that's from the gross pay. So we find 3% of 180,000, which is equivalent to $5,400. Statutory income. What is your statutory income now? So your statutory income is going to be your gross pay minus your NIS and your pension contribution, right? So our statutory income now is $164,600. Now we're gonna find our education tax portion, which is 2.25% of the statutory income. And it is equivalent, let me just shift my screen a little so I can, good, right? So it is $3,703.50. NHT 2% of the gross. So the only thing with NHT, if you earn $10 million, it's going to be 2% of the $10 million. There is no threshold, no minimum, no cap for NHT. There's a minimum also. There's a minimum for NHT, and the minimum would have been the minimum wage. Once you earn less than that, there's no calculation. But there's no cap on it, right? So that 2% of the 180,000 is 3,600. Now we're gonna move down to how we calculate the income tax. So our monthly income tax threshold is $141,674. So we're gonna find our statutory income, which is 164,600. Take off our income tax threshold, which is 141,674. Now we're left with $22,926. And we're gonna find 25% of that, which is equivalent to $5,731.50. And we have in our far right column would have been the deduction. So our total deductions for the month would have been $28,435. What is it? $35, right? So now Miss Mullins only have $151,565 as our net pay. And that's what she goes home with, right? So yeah, this is how you calculate your salary. Right, so we can move on from here. For self-employed persons. So for self-employed persons, they pay the full amount in regards to NIS, and it is 6% of the net income. And that is after, that would be the net profit. So you declare your total gross and your deductions, meaning that any business related expenses. Once you arrived at that net profit, net income, then 6% of it would be charged for NIS, 3% for NHT. And go ahead, Miss Anita.
Yes, miss. Thank you, miss. So is there a specific threshold of where this is concerned for self-employment persons, the 6%, 3%, the deductibles, if you may, is there a threshold for self-employed persons?
All right, so in regards to the calculation for NIS, we don't really have a threshold. Yes, we do have a cap. Let me tell you, we have a cap for NIS, and we have the minimum as well. Because if you earn under If you earn under 200 and I'm trying to remember the figure, 207,000, I think, for NIS, then what is going to be calculated is just a flat rate of 13,000. And if you make a nil declaration for NIS, it's going to be 13,000 as a flat rate, and it is equivalent to the stamps per week. So if you are to purchase stamps for what, $150 or $250, it is going to be equivalent to the 13,000 for the year. But there's also a cap, and it's capped at 5 million for NIS. So if you earn more than 5 million, the calculation for NIS is only going to be on the 5 million. So if you earn 5.667 million, NIS is going to be calculated only on 5 million. All right.
Okay. So question, Miss. You it's best to file a nil than to not file any at all?
Yes. You can file a nil or not file any at all, because the thing is that there's room for adjustments. So if it's a case where you haven't completed if you haven't completed in terms of your profit and loss, right, and you're wondering what to do, you still can file the nil return, because there's always room for adjustment. You can always amend your return. Because if you make a declaration and something is wrong, then you go back and amend the return and write a letter stating the reason for the amendment, and you upload it. So all returns can be amended.
So do you file the nil after the demand notice, or do you have that opportunity, or is it before? How does that work, please?
You do have the opportunity to file, because remember, it's a self-assessed system and you are making your declaration. So you could be declaring the nil, and you can declare nil. What if you did not operate within that year? You didn't operate at all, so you didn't earn any income and you didn't accrue any expenses. Then you will still be required to declare your nil return.
Because
so that the declaration of the declaration of the return, is actually declaring the status. So if it's a nil return, it means that you didn't have any income, you didn't have any expenses to declare.
So how does that work now if you were employed during that period and your employer was supposed to be paying that for you, and then for your business, because my business is connected to my TRN, so I still have that demand notice. And what I do as we're on this session is I log into my TRN, my TAJ portal, and I'm going through and looking through, because I have so many questions in regards to this. I've been waiting for this session, because I know that I'm in trouble, a lot of trouble. I open up to 31 messages, demand notices and so on. And it's concerning for me. Why? Because I am not making the money that they are demanding me to pay. And I think that they are billing me based on what I think, my projections of this year for last year. So I wanted to know a little bit about that too. How do they bill? Is it that I project from last year and you bill me just in case I make that amount of money and I can file the nil then?
All right. So that is, all right. So I'm going to, let me address this for you now. So you remember I was explaining to you, declare all sources of income on the return. So once you have registered your business, and the business may not be operational within that year, but you were employed, you are to use your P24. So you will request your P24 from your employer, and you will use your P24 to declare the income from employment. This doesn't mean that you're going to pay again. It's a matter of declaration. So filing your return is a matter of declaring. So the information from the P24, which would have been your gross income, the income tax deducted, all the other deductions, that is what you're going to declare on your return, to show that during this time, the only income I have earned would have been from employment, and all deductions are made. So you include the deduction. The return has everything. It has every line for you to declare the education tax deducted, the NHT, the NIS, the income tax, everything is there. So it's a matter of declaration.
Okay, Miss. Thank you, Miss.
So for those years, and even so, once you are employed and you have an addition, you register a business, that's your additional income. you ought to use that P24 every year and make your declaration. So you declare if your business is operating and you're making profit or you're making loss, you still make your declaration.
So question, so if you were employed and you are not employed anymore, do you still need the P24?
You're talking about for the years that you need to file?
Right, yes, for the
so for the years that you need to file, once you were employed during those years, then you still use your P24, and you only can file from 2019 because what we operate by in terms of the tax laws, you can only file 6 years plus the current because of the statute bar limitations for under which we operate. So we only can file the past 6 years in terms of annual returns, along with the current year estimated return.
Okay, so for the
if you
5,000, so for the 5,000, this one is a burning one. So for the $5,000 a month, that will be the interest, right? If I file nil, does that $5,000 continues all the way up to $1 million based on the demand notice?
No, not necessarily, not necessarily, Miss Anita. Let me tell you, it's 5,000 penalty. And it is the penalty for the late submission. But it depends. So if you're a sole proprietorship and you have income tax on your return, there's income tax as a declaration on the return, then you will automatically see the calculation coming on. But when you have filed the return and it has been posted, by the next day, you will see that. If you file your return and there's no income tax portion, then you're not going to see it because the penalty is going to be calculated based on the declaration of income tax. And that is how it actually works. Even if you file and you see, like if you see $1 million coming on your account and it is saying income, if you're seeing just the penalty and the interest, I don't want it not to sleep and go and have a heart attack. Please don't bother take it to heart. There's ways to work it out, right?
I am so afraid. I tell you that I don't even log
that
into the TAJ portal to tell you. I don't
there are
even
lots
open
of
those
persons.
emails. You people scare us bad, like scare us, and I don't know if it's a good thing that you know of an educational unit, and I do hope that more entrepreneurs outside of this program will have access to this information and so on, because trust me, outside of this, I was so scared bad, because when you don't have the money to pay and you see all of those demand notices and you know that, hey, whether or not, you are supposed to pay this, and there isn't this, for me, I didn't see this appeal system now that you are talking about, and I thank you for this. Thank you so much.
You're welcome. You're welcome. And this side of TAJ, the taxpayer education unit, they call us the soft side. Because, we are here for public tax education. So we're going to actually hold your hand and lead you in the way that you should go. So I understand, I do understand what you're saying, because you're not unique to this situation. There are a lot of persons who are scared of tax administration. And then what I always say in my presentation, knowledge is power. Once you have that knowledge, you will be able to make more informed decisions. And once you have that knowledge and you have that right, you know how to operate. Because you may be scared of tax administration, Jamaica. But outside of what I'm going to say in regards to, all right, so what is happening now, we have a special arrears settlement program. And if you have outstanding returns, you need to file all outstanding returns. And if you file your outstanding returns and you see the penalty and interest accruing on your returns for the late submission, once you file and you pay just the tax portion, if you have a tax liability on it. So if you have a principal amount and you pay that amount by May 31st, then you will benefit from this program in having the interest and penalties being waived. So that's a program that we have currently running up to May 31st, 2025. Outside of that, you remember when I touch on your rights and your obligations, taxpayers have a right to apply for their interest and penalties to be waived in the event that they cannot afford to pay them. So that's one of your rights and your obligation.
Wow. Wow. Okay.
Yes. So you file your returns. You may be filing because some persons are not au fait with the system. They are not knowledgeable of what to do. They don't know a lot of things. Because more, and I can say for entrepreneurs, and that is why we're trying to reach as many entrepreneurs as we can to get them on the right foot so that you know actually start your business, and then due to taxes and fees, then you plunge back in that situation that you didn't want to actually start in. You know, so we really want you to start your business and to, based on your plan, want you to go ahead, you know, and just honor your obligation and prevent the accrual of interest and penalty once you can. All right. So this is one of the reasons. So you're right. If it does happen, you do have a right to apply for your waive, or apply for a waive of the interest and penalties. Right. So it is each and everyone's right.
Okay, Miss. Thank you, Miss.
All right. So we were at NHT, right? The calculation now. So for a self-employed person, it would be 3%. And for NHT, there's no cap. We don't have no cap on that one. All right. Education tax, 2.25%, and it's of the statutory income. Minus, you know how the statutory income is arrived at. Net income minus the NIS. Approve, or if you make your contribution to any approved pension, and it's also called superannuation or superannuation. So approved superannuation / pension / contribution to approved retirement scheme, right? So that is what we looked at. The income tax, 25%, and that's for your statutory income. Take off the nil rate, which is also called the income tax threshold. And that is how you make your payment. And remember, even though I don't have it on my slide to say the 30% is only applicable once your net profit would be over 6 million, right? And that's how you pay the additional. And that is not for the entire 6 million, it's just what is excess. So if you earn 7 million, it's just the excess. So 1 million would be taxed at 30%, and then below they would be 25%. All right, so we step over into another tax type, register for GCT, which is a general consumption tax. And we know that this tax is down to the consumer level. We cannot escape it at all. All right, so all persons who are engaged in a taxable activity must apply for GCT registration. Go ahead, Ms. Mullins.
Oh, I wanted to ask before you jump into GCT. If you take on a 9-to-5, but your previous engagement was totally entrepreneurial, how do you deal with the request for P45?
All right, so your P45, well, the P45 or the P24. I don't want it to be messed up. But let me just explain the two terms. All right, so the P45 is what is given to you from your employment at the point of separation. So when you're leaving a job, you get a P45.
So I meant 24 then.
Yes, so the P24 is a certificate of income, a gross income repaid along with the deductions, and that is your yearly. That's for the certificate for the year. So your question would have been, if you were entrepreneurial before you have actually gained employment, how do you actually get this? So you're saying to me that you are still earning both income, right? Or you have seized one?
If I did what?
If you're earning both income, so moving from entrepreneurial to employment, or is it that you will be still earning from your self-employed activity along with your employment?
So there's a difference in terms of whether or not you'd be having both incomes or only one?
All right, so the difference is that if you're talking about the same year, so all right, so let me just drill it down a little for you. If you have been moving from entrepreneurial income to employment only within a year, Within that same year, it still means that you make a declaration for both activities, because within the same year, you would be earning from employment and you'll also be earning from your entrepreneurial activities. So you still make your declaration and filing your returns for that.
Right.
If you have closed that business and you are now only earning from employment income rather, then you are to inform us. You inform us by way of a letter and your job letter. So you would have stated that you are no longer earning from self-employment and you're employed. So you ask us to update your ledger. Once you have, we would have actually give you directions in terms of how you operate in that you ensure that you close that business at Company's Office of Jamaica and then do the final closure with us at TAJ. Once that is closed, then we will adjust your ledger. Once you are now employed and your employer is doing all the deductions from your salary and paying it over to us at TAJ.
Okay. So when you are commencing employment and they ask you for a P24, when I was moving from job to job, I would have just gotten it from my employer. But when I'm an entrepreneur,
yes.
Oh,
So when you're an entrepreneur, you wouldn't have that to actually show or to give them. But what you would have done is to probably indicate that you are a sole proprietor and you have been earning from income. And if they need supporting documents, what you can present to them is a copy of your income tax return that you would have filed.
Okay. All right. That's useful. Thank you.
All right. You're welcome. All right. So for GCT, persons involved in taxable activity must apply for GCT registration. And as such, you would have been empowered to file and pay GCT on behalf of the government, right? Go ahead, Mr. Nita.
Miss, what if you separate from your job and you did not get that P form? What happens, please?
The P24.
Yes, please.
What we do, we recommend that if you didn't, most times you may not get it, but you can reach out to them and request one, because it is all right for you to get it, you know. If it's a case where you cannot reach to them, what we ask is that if you have your last pay slip that has the year to date, we may be able to use that information.
Okay, I have that, Miss. I have that.
Yes, so you know your last pay slip of that year, you may be able to use that as well.
Awesome stuff. And you're gonna tell me a little bit of how to use it, but after, right?
Yes, I can tell you how to use it. Not a problem.
Awesome. Thank you.
You're welcome. All right, so we look at what the taxable activity is, and we look at any engagement carried in the form of business, trade, profession, vocation, association, or club, right? So those would have been activities that allows you to register for GCT. Once you are registered, you are empowered to charge and collect GCT at the specified rate appropriate to goods and services that you supply, right? So if you are a service-based entity and you're supplying a service, if you're into the retailing of goods and services, then that's how you actually add that GCT portion to your invoice to your customers. And then at the end of the period, you will be able to make your declaration in terms of the total sums that you collect for GCT, along with the amount that you would have incurred within the business. So it's like a net off, right? You are empowered to calculate the taxable period, which is net tax due or creditable, and you file the returns monthly. So this line, so what I'm speaking about here is that if you say I earn 5 million for the month and I have 750,000 out of it for GCT, that's what I collect for GCT. But I have a business, I pay bills, I pay GCT, I buy, actually I purchase stuff for my entity and I pay GCT on it. when I put in the information on my GCT return, what it does is like a set off. At the end of it, it may become creditable because I may actually, the goods that I might buy in that period, maybe I may spend more on that GCT in regards to what I collect. And that is how you may get a credit. Or it may be the other way around, that I spend what I purchase, the GCT that I paid on that goods is less the amount that I collect. And it will end up in a net amount payable. And that is how I pay the GCT. So that is really how it really calculates. And it is filed on a monthly basis, due on or before the last working day, right? So if the last day of the month is going to fall on a weekend, the last working day would be up to the Friday, and that would have been the due date for the GCT. Even if a month something happens and you have no, when I'm saying no sales at all, or there's just no event, no operations, you are still required to file a nil. If you don't file a nil for the GCT, then you'll have penalty and interest being waived for GCT. So for GCT, this is one of the taxes that we say, we don't want you to really play around with this. In regards to, though, the other income tax return will be easier for you to apply for a waiver, but for GCT, it is a little bit different, because in regards to the laws that govern in terms of the laws being governed for the waiver of the penalties for GCT, this is a little bit different because this has to go specifically to the minister and he has to grant that approval. Right, so it's a little bit different in regards to GCT. So when there is no, if there's no activity, file your nil return, moving right along, okay? And if you don't file the return, and then after 60 days, then you will be seeing the estimates being raised on your account for the GCT. So you see the estimate raised for that period. All right, so your declaration would have been from we have just hypothetically from March 1st to the 31st of March 2025, and it is on the sales. So your declaration is on your sales, just what I just explained, your sales, and the GCT spent on your goods and your services that you need. So that is how it actually calculates. So we move to record keeping. So we know that this is kind of a little sore point for most of us in Jamaica. And I say it's a sore point because sometimes it is that we always start a little hustling now. We're hustling. No, man, it's a business, but you know, we start a little hustle first. And we just have to see what can happen. Yeah, man, me do a little hustle. But what do you have to show that what you're doing is profitable? Or whatever I'm doing now is not even profitable. So it is by law that all business operators maintain your records in English to substantiate your income and your expenses. And those records are to be maintained or kept for minimum of 6 years. Right? So if you're called upon from tax administration to present documentation in regards to the income and expenses that you declare, you'll have those ready. Right? So it is by law that you keep your proper records. You keep your receipts, and then you can still put your Excel document on how just to ensure that you have it in a correct form, but you keep your receipts and your invoices. Yes, Mr. Nito, go ahead.
Suppose you guys call upon us, Mr., and we can present that which you call upon us for, Miss. What are the implications, please?
Okay, so the implications, it depends because it is what is called is like an audit. So the implication is that you may be assessed in terms of an additional assessment. And that is based on the interview. Because it depends on the scope of your operation. So say, they will look at probably if look at the other businesses around you in terms of the same operation, in terms of making decisions and so forth. So they just don't land something on you like say, oh, I'm going to just make this man pay $1 million, even though I know he's not No, that's not what the goal. But if you leave yourself open for an assessment to be done, then an additional tax may be raised for you. And that is one of the downturns in regards to not having your records, because you can declare that you earn 5 million, but your records show that you earn 2 million. And then they're going to ask you, so where is the others? So your bank statements, your invoices, to see how much you pay out in terms of your bills, your utilities, your other expenses. So those are things that they look at. So if you really don't have the records, I mean, you leave yourself kind of open.
Okay,
Right?
Miss. Okay, Miss. Thank
Yes.
you, Miss.
So that is the reason for us we ask you, but we're still not hard on you. In regards to me, you may not have all of your invoices, but I mean, probably we can look at, and it depends on, I know that some of the receipts fade. So what we recommend is if you can actually, if you copy, you photocopy and you keep them, or if you wanna save some of you have probably a different operating systems that you may do keep your records, and so you have that to rely on. So you can use some of those to invest in. You may probably take some pictures of the receipts and you store it. So you store it somewhere in your cloud or some storage area.
So what if you pay cash? Can you like write it down and keep a record of that? Because sometimes we just see something on the road and buy it for the business, you know?
Yes, sometimes you do. And sometimes I know that is how you may see something on the road, you buy it, but the person not going to give you a receipt. But what you can do, you are to ensure that you actually, I know you're not going to really walk. Sometimes you don't have your receipt book to walk and write it and give it to them to say that, oh, I paid this for that. But you can actually write it and attach. When you get back, you have a little receipt book, you write it and attach it, and then you keep it. So you can actually do that.
Okay, so I can write myself a receipt for that.
Mm-hmm.
Okay,
the same
awesome
day that you
stuff.
made the payment, yes. All right, moving a little more. All right, so what are the benefits of record keeping? Monitor the progress of your business, prepare your financial statements, and identify the sources of your income. Keep track of your deductible expenses, prepare your tax returns. You know, sometimes when it's tax return time, some persons running up and down because they can't find this information. Lord, me not remember how much me did spend here, so me not remember how much me did get here. So what it does, once you have your records, it is easy for you to ensure that you have your proper documentation in return, in actually allowing you to declare a true return. So supporting the items on your tax return. So your gross income along with your deductible expenses, right? Obligations, what are your obligations to TAJ? Honesty. So we ask that you be honest with dealings with our tax administration in Jamaica. Lodgement of return documents and information. You should file the correct returns and documents, and you provide complete and accurate information within time limits specified. And we're talking about once you have a due date, you others honor your due date, right? Your tax payment, you should pay your taxes on time. You keep your record, sufficient record to enable your tax liability to be ascertained accurately. And this is like, we just sing this song again, pay no more than your fair share, right? So pay your fair share. That is what it is. Keep us informed. It should keep us informed if you have a change of business, your mailing address, your business name. So if you do any changes to your business at the Companies Office of Jamaica, ensure that you come on over to us as TAJ and do your updates. Because what I realize is that some persons, they probably take it for granted that once they do any adjustment at the Companies Office of Jamaica, it actually feeds over to us at TAJ. But let me inform you, no, it doesn't. There are certain things that you have to come on over to us and provide information in regards to that update. So your change of business, your change of name, your mailing address, change of directors, and so forth. Once that is done, then you come over to TAJ and have us make the necessary adjustments on our system. I know I'm almost here. So I know I'm not far away from, yes, I'm almost at the end. So in terms of registering for e-filing and payment, persons must first have a Jamaican tax portal login to make payments as well as to register to file returns. This is done both manually and electronically. So if you visit the office, we'll be able to assist you in your online registration. So you complete the application form and we may be able to assist you. You can actually create the online account and take in the form so we can register you, or you can stay in the comfort of your home, your office, anywhere, and go on our TAJ website, create the account, and then you apply for e-services and upload your ID. Comes into us, we do our processing, and then you're registered for e-services. So whatever is more convenient to you, we actually implore that you make use of that, right? So once you create that login and register via the web services as just explained, you may also call our customer care line if you need assistance in registration. And our tax help line is 888 tax help, just 888-829-4357, right? So you can even call us to be registered. What are your benefits of e-filing? File returns anytime, anywhere, 24/7. Whether you're on the beach or you say, oh, I'm on a vacation, oh, and I need to file, I can just pull up my laptop, my tablet, I can file on my phone, any one of those gadgets you can use and file your return. It eliminates the need to visit the office, saves time. You don't have to come there and wait in line. Time is money. Could be using that time to secure another big contract, right? And it reduces paperwork. So anything that you do online, you can always go back and retrieve it. You file your return, you can always retrieve it. You make your payments, retrieve it. You send your web messages. You communicate to us through your web. It's all there. It allows view of your account summary. You can see what your account looks like, how much you pay, how it is being reduced, and all of that. You can have all of those benefits, right? So in summarizing, the need for potential and practicing entrepreneurs to know their tax responsibilities, rights and obligations. I cannot overemphasize, but just to give you information to say that we operate in a self-assessed tax system, and so the onus is on you, right? Onus is on you to calculate, report, and to pay your tax liability. Remember to register your business so that you will have an upgrade to your TRN, or if it's another entity, register so they have their TRN if you haven't done so. Understand the various business tax type and that relates to you. So you know that not all the tax types that I've gone through will relate to your business, but it's just to help you to understand what relates to you and just to honor what relates to you. You comply with your tax laws and aim to remain compliant. So when you're ready for your tax compliance certificate, you can just apply for it. Boom, no doubt. But if you have outstanding, you still can get your tax compliance certificate, but it's just that a way of, you just come into us and we'll be able to settle by negotiation, whether you enter into an arrangement so that you can still get your tax compliance certificate. So there are still ways if you are not fully compliant, but there's a way in terms of us getting you on that path and still issuing your tax compliance certificate. We remind you to keep proper records so that your tax liability is accurate and to know what your rights and your obligations are with us at Tax Administration Jamaica. You can contact us at our tax helpline, which is 888-829-4357. you can go on our website at www.jamaicatax.gov.jm. Send us an email at the TE_CS@taj.gov.jm, and that's for Consent Spring. Or you can send any email to taxhelp@taj.gov.jm. We're on Facebook, we're on Twitter, we are on Instagram. So you can always find us as on our Instagram page, Jamaica Tax Online. So you can find us anywhere, right? So this would have been the end of my presentation with you today. I hope that you would have actually learned something. I'm not going to say that you're going to remember everything because it's quite a lot that I've actually shared with you today. But I know that something will resonate with each and every one of you today. All right, it was a pleasure speaking to you today. And I hope that I've answered most of your questions, and I'm still open for other questions. All right, thank you very much.
Morning, Miss Cephas. How are you doing?
I'm good. Good morning, Miss Bloomfield.
All right, great. All right, could you just go back to the GCT registration? You said that as a business, you are required to be registered for GCT. So could you explain that part in light of the GCT registration limit?
Okay, no problem. All right, so you're talking about this one, right? All right, so for the GCT.
Oh, I'm not seeing anything.
You're not seeing?
Go ahead. I'm seeing
now. Tell me.
Yes, go ahead.
Okay.
I am.
All right, and then I'm happy that you take me back to this page because there was an important information that I didn't share in regards to the threshold. So there's a GCT threshold.
Right, that's where I was.
Yes. All right, I need to add it. So the GCT threshold is 10 million. So if you are not earning 10 million per year, but you are in a taxable activity, then you are not to register until you make that $10 million, right? And what does this mean?
Question.
Go ahead.
Just a question. The 15 million, when does that come in?
Well, the 15 million is not yet. It is not. We don't have anything. We don't have any amendment to the GCT Act as yet in regards to the 15 million. But as
so we're still at the 10.
We have something, it will be shared with the public so that you know. And then we know that for the tax administration, Jamaica will be doing their internal operation in terms of how we will be informing all our persons, especially who are registered for GCT. And if you are under that amount, then I know that, you know, whatever is to be done, you will be advised. All right, so for the 10 million now, which is still the threshold. So and that's the annual. So if your entity is earning less than 10 million, then you ought not to register for GCT. And by such, you are not to charge GCT to your clients. So if you are conducting business, you are not to put any GCT amount once you are not registered.
All right, great. What happens if you are below the threshold? So you were not registered, but during the year, you might go above the threshold. How do you do that? Especially if you have an income stream that's erratic. You don't know when you're going to be up there or when you're going to be below it. How do you treat with that?
All right. So once you have, all right, so let me explain this. Once you have been in an activity where I know the income is not going to be, I know the income will fluctuate, but in that year, if you have surpassed that 10 million, then you'll be required to register for GCT. So you can register for the GCT, say the January, and then going forward, you actually file your GCT returns every month. And I understand how some activities work, you may actually have a big contract and you get a large sums of money and you said, okay, push over the 10 million, but then next year it may be less. And then, as you say, it may be erratic. So once you're over the 10 million, you are required to register for GCT. There are some activities, and activities such as the sale of motor vehicles. So once you are a used car dealer, you may actually just register once you're just registered, those are persons that we actually allow them to register for GCT even before they would have actually meet that requirement in terms of the 10 million, because their terms of operation, it is a taxable activity, and the GCT that they're going to be incurring, GCT in terms of the imports and also the advance payment at customs. Then in terms of how you actually, I know for them, the used car dealership, by the end of the year, they are way past that 10 million. Because probably at a sale of 2 or 3 motor vehicles, they're over the 10 million. So those persons would have been required to register for GCT. And remember, there are other implications to it also, because when they provide an invoice to their customers, they need to put a GCT on it also, because they're in a taxable activity. So those are some of the entities. Those are some of the operations we look at in terms of the used car dealerships.
All right. So just another one on GCT. So suppose the person is below the threshold, the person registers.
Mm-hmm.
They are below the threshold.
Hello? I wasn't hearing the last thing, Ms. Blomfield. Are you hearing me?
Okay, I'm hearing you. Oh, you just disappeared from my screen, but I'm hearing you.
Oh.
So if the person registered, let us say the person's just started a business, or somewhere during the period of activity, they decided that I'm going to register, but they are below the threshold. They have registered. They can still collect GCT and pay over, right? Or as long as they're registered,
yes, if
they're
they
required
register, if they register, because they can be in a taxable activity, but they may be earning less than the GCT threshold, but their projection is that at the end of that year they will surpass that 10 million, then they can register, and they will be empowered to charge GCT to their clients. And any GCT that they incur during that operation, they can
claim. Okay.
So
as long as they register, they need to collect and pay over.
Yes, as long as they register.
Correct. So guys, please don't register. If you register, you have an obligation.
Once you're not earning that 10 million, I would recommend that you wait until you have earned that 10 million within that year. Then you can register for GCT the following year.
All right, great. Come on, guys, come with your questions. All right, so I'm going to ask another one for them.
Go ahead.
In terms of employer, a contracted person versus an employee. What's the litmus test for that?
All right, so the contractee, so once you have persons on contract and you have employees, they are treated differently. So for the contractees, what you do is just to pay them the amount that you would have contracted them for. Those persons would have been responsible to file and pay their taxes, because then no deductions will be made from the employer. These persons Once you don't have, if you contract them to do a service or to provide a good, then the onus is on them. If they are required to be at your office and to use your tools to provide that work, and you supervise them and they wear your shirts and advertise for you, they are your employees. So some persons kind of get it a little bit twisted to say,
Say that
okay,
again, please.
all right.
Please
So
repeat
you
that
may
part.
have, because I know sometimes some employers may say, oh, I am contracting them. But you're contracting the persons, but you are allowing them. They have a specific time to arrive at work. They have to work a number of hours with you. They use your tools of operation. You supervise them. They actually wear your shirt or your company logo and display. So that's advertisement. They are not your contractees. They are your employees.
And it doesn't matter if you have given them a document that says
It doesn't
you are
matter if you have
responsible.
document. All right. So you would have documented them to say that they are on contract. And that is where sometimes it goes to the Ministry of Labor in regards to being on contract and so forth. And you have contract break. And so they can be contracted, they can be contracted for a period, but they are your employees. So you are still responsible for their taxes and contribution.
I was more talking about if you give them a letter to say you are responsible for your taxes. Does that work?
Okay, so you can give them that letter, but still it depends on how they work.
So all the criteria have to be met, meaning suppose they are at your office with their own laptop, you supervise them, they don't wear your shirt. Is that employee?
Oh, they would have been, all right. So they can work from your office, but they're using their tools. So they would have been contract. You contract them.
Suppose they are using your computer.
So if you give them, if you actually hand them your tools to work with, and they are going to be working within the specified hours, then they're employees.
Okay.
They are your employees.
What if you lease the tools to them?
Oh, well, if you lease the tools to them, that is different. So those would be under the contract. So if it's a matter of leasing them, then those would have been, you contract them. And then you can look at the activities. What if you're in a seasonal activity and you only need this person for, all right, this season, Christmas coming up, I need this person because of what I do. I'm going to need them for November, December, January. I'm going to have them. Those would be contracted because you only have them seasonal. So those would have been persons that you can keep on contracts.
So I was just thinking that, I don't know, I think that sometimes we sort of, the lines get blurred.
Yes,
because it seems as if you have any one of the, it's like any one of the following makes them an employee. Is that so? Or it has to be two, or it has to be use of tools. As long as it's use of tools, it's employee. They don't have to have the other things. Anyone is more critical than the other in determining that?
What is really critical, and if you did, all right, I know if you're going to, because you can contract them and allow them to use your tools, it's up to you if that is what you want. But in regards to how the job is done, in terms of if they are expected to be at work, say between 9 to 5, and they have to be supervised, you actually give them a task to be done daily, right? And they have to ensure that they show up. Those are employees. They would have been your employee. Your contract no, and I know that this is like a little sore point because we have recognized that some persons are saying, oh, I work with this person, but they don't do any deduction for my taxes because they say I'm contracted. You can contract somebody in the event that, what if you know that they have a permanent job So they just come in, I mean, certain hours to come and do some work for you. And so those would have been persons that you can contract. But if you're gonna have this person, and by way of contract, you know, because there are different contracts, because you can sign the job contract to say, yes, I am going to be working with you for whatever period, what your expectations, what your requirements are. And it can be, when you look at some things, because I can contract it, when you look at some things, because I can contract you, say, as a project manager. And as a project manager, I can contract you, and based on how much we negotiate for, I said, if it's 6 million, it's 6 million, then you're required to pay your taxes. So they are different, and I don't have to tell you that you have to be there. You are going to really manage the project. So those would have been different. So we're looking at the difference. So you are talking about somebody who has to come into the office on a daily basis. They have to work within under your specific regulation or your policy, and they have to adhere to the policy. Those would have been areas for employees.
All right, a gardener, 3 days per week.
Mm-hmm.
Use your tools, goes home. You don't have to supervise them to cut this tree or so on. Employee?
No.
Okay.
Mm-hmm. So
Awesome.
the gardeners wouldn't be considered as employees.
Okay. All right. Any other questions from you guys? I have one more that I want to ask for you if you don't ask it. Are you still there? All right, so I'll ask another one before we leave. So, you know, for self-employed persons, you have some expenses that you can deduct as allowable expenses in the business. Can you give some guidance as to what some of these expenses are and on what basis you can deduct them?
All right. So when we look at the expenses, what we generalize as expenses wholly and exclusively incurred during the operation of the business or in order to earn that income. So because we have different sole proprietorship, different engagement, different activities, there's not something that we can say, all right, these are the specific ones. But what is specific to each and every entrepreneur would have been the expenses that is wholly and exclusively incurred as by way of earning that income. And in extension to, I know motor vehicle is one of the points that a lot of persons may ask, how, if I have a motor vehicle and I have to use it, how do I claim it? If you have a motor vehicle and it is personal, you use it for both work and for personal, you still can claim some of that. So what we do is to tell you to apportion the expenses in regards to the motor vehicle expenses. All right. And let me just say, you have your business, but you have to move from places to places. I mean, to actually do your business. You may have customers that you have to engage. You have to visit the customers. You have to probably, you do delivery sometimes, you know, and that is still your personal vehicle that when you're ready to go out, you take out your family in that vehicle and all of that. But you still use that. Your vehicle is one of the way that you earn that money. So those are some expenses that you can claim. But what you will not be able to claim is 100% of it. All right. So you will say, for example, and even so, not just that alone, I'm going to touch the work from home too, but let me just give you the motor vehicle part of it. So the motor vehicle part of it, you will be able to claim a part of the insurance, registration, fitness, the gas that you put in it to actually up and down. So those are motor vehicle expenses. The wear and tear, so repairs and maintenance of that vehicle. you'll be able to claim a portion of it as motor vehicle expenses, because your motor vehicle is one of the tools that you use to actually earn that income. And just to be fair, in regards to how often you use it, you may be able to take a percentage. So say I use my motor vehicle for 5 days out of the week. That is how I work. I have to be going to different customers, and I go to places and all of that. Your toll tickets that you go through the toll, if you have to go and meet clients down the North Coast, whatever side, those would have been, you claim your toll tickets. Your toll ticket would have been something that you put on it 100%, because that is the reason for you heading into that direction, right? But in terms of repairs and maintenance, because you use the vehicle for personal and for business, then you will be able to allocate a portion of it for the expenses. And if I use my vehicle 5 days out of the week to do my business, you are able to claim 80% of that expense on your return. And it's just to be fair, right?
Yeah, got it.
Yes,
Fair.
so this is how we actually allocate. And in terms of what is called capital allowance or / depreciation. So for your depreciation, we don't allow depreciation for TAJ. What we allow is capital allowance. And for the motor vehicle, we give you the amount that you can claim per year and for the number of years that you can claim it. So the capital allowance would still be an allowable deduction. So say, and the capital allowance is that, say for your private vehicle, you get 12.5% of the cost of the vehicle, and you have it for 8 years. So when you find that 12% each year, it is done on a straight line method, you can claim that. But once the same percentage that you would have used to claim the expenses, which would have been the 80%, that is what you would claim as the over on the capital allowance side. Would have been when you find that 12.5%, then you find 80% of that and you claim it as capital allowance in order to be fair. So we know that you use the vehicle for both personal and for business. So that's how you still get a portion of it. When we move on to persons working from home.
Before you go on to persons working from home, just two more things on vehicles. Suppose you have a loan.
Oh, if you have a loan on the vehicle, the only thing that you can claim is the interest.
Interest, all right.
Just the loan interest, and as a percentage, if you use the same 80% for the motor vehicle expenses, you're going to use the same 80% of the interest for the business. So that's all right. So it's straight across the board.
Suppose
if it's a case where you use the vehicle 50-50, 50% personal, 50% for business, then you use the 50% across the board.
All right. Suppose you have vehicles purchased in your name, but you use it solely for the business.
Is it that as a sole proprietorship?
Sole proprietorship.
Okay, because yes, if you use it, well, if you actually, because you can, what is going to happen, you know, the vehicle will still be registered in your name, you know, because it's the I'm gonna say to you, because
so there's no
your
asset.
business really, you and the business become one once you're a sole proprietorship. If the vehicle is solely used for the business, this means that it is a trade vehicle, right? So trade vehicles, you can claim everything for them.
Even though it's in your name.
Because the business would be in your name. So it would be you trading as, and the motor vehicle will be registered in your name as well.
Okay. So it doesn't make any sense to transfer it into a business name per se.
No, because it's going to be the same thing, because it's going to be your TRN.
All right.
But if it's a case where you register limited liability now, and you know
then
that the vehicle that
different.
you're buying is solely for the business, then you register it in the company's name. So you can claim all expenses, 100% expenses.
Or you could like have a lease arrangement with yourself if it's a limited liability company.
Yeah, well, if you do the lease, or If you do the lease agreement, it's going to have an effect on you filing your income tax as well. Because say you lease the vehicle to the company for
the
100,000.
income.
Yes. So you still have to declare that lease income as a rental income.
Right.
Because it is going to still be income to you. So whether if you choose to do that, you can, but you will still need to declare it on your personal income tax return.
All right. Tanisha, hope you got that. All right, you can move on. Let's see if I today work from home.
Yes, another touch. I know that based on what is happening in today's world, a lot of persons work from home, and they would have want to know how they apportion some of the utilities there. So in regards to the activity that you're doing from home, if it is like, if you're looking on catering, baking, and you do everything from your kitchen, and your utility would have been increased in terms of your light bill, your water bill, those would have been increased. What you can do is to take your bills and look at the difference that you have been incurring. And also you can look at the regularity of your operation. Suppose it is that every day you have to be in the kitchen baking, cooking, you know, those things. So when you actually look at the utilities, you're gonna still calculate the utilities based on the usage. You would have seen a trend in regards to the increase, and that's why the increase, you can actually use the increase as the foundation to take off. All right, the increase is that all of that increase for the year is going to be charged to my my expenses to be claimed, right? Or what you can do is the same percentage. The entire utilities, once you actually total that for the year, then you see how often you actually use, the utilities there. And based on that, you can use a 60% or 50% in terms of, because what you would have done, you would have seen a trend. So I'm not going to say that looking at it, you may have a light bill coming for 20,000 each month before you start your business. And then when you have your business now, you see the increase of, you see you're getting it 30,000 now, every month, 30 something, you know, within that batch. Then it's easy for you to say, okay, so I realize that the difference I'm seeing at 10,000 or 11,000, 15,000 difference every month since I'm actually working from home. So those would have been areas to look at to see how best I can actually take off that portion and claim it as the expense. Same thing for your water. If you use your internet, if you work from home on an online base and you use your internet, then you can actually apportion it as per percentage. If you work all day, you work all day, and that's if you don't have any internet, you don't have any work, you can't earn any money, right? Then you look at it to see if I'm working 5 days for the week, all right, I can claim 80% or 70%. So it is just being fair to yourself, being true to yourself in regards to how do I work? What's my frequency of work, and in accordance to the increase in my utilities. So those are things that I really I look at, right? If you pay mortgage is not a part of mortgage is not a part of expense. You cannot claim mortgage. If you pay rent, you can claim a portion of the rent. And it is that if you have a designated space, a designated room that you operate from, how you actually do the calculation would be probably if you have a number of rooms in the house, so you have about 4 rooms in the house in terms of, you do a little calculation in 1 over the number of rooms times the amount of rent that you pay. And when you get that portion, then that's how you can claim it. And that is if you have a designated space, like you have your desk and so forth. So that is how it really works from home.
And suppose you do not have a rent or a mortgage, can you claim anything for use of your space?
No, you don't claim anything because you're gonna charge yourself the rent and then you're gonna still put it back on the return.
Okay.
Because it's like you're be paying yourself the rent.
All right. Guys, do you have any other questions? I don't see Abby Afari fell off.
Oh, you probably dropped out.
Tanisha, Tishana, Matthew. I didn't see Nicholas today. Do we have any other questions for Miss Cephas?
No, not really. Took a lot of notes and got some updated about some of the knowledge from yesterday as well. Very informative, and thank you very much for being a part of our session today.
You're welcome.
All right, Matthew. Tanisha, your mic is open.
Yes. Question: can I be deregistered from the GCT?
Yes, you can apply to deregister from GCT. Yes. So if you're below the threshold, if you are no longer operating, you can apply for deregistration.
I am concerned because I was forced to register for the GCT, and I know I'm not earning above the 10 million.
What's the activity of your business?
Wholesale retail, groceries and meat.
Okay. Okay, so that is one of the reasons. Okay, because you're into retailing. So most of the items that you have would have been a GCT items.
But some of these suppliers, the GCT is not broken down. So I don't see why am I supposed to calculate GCT on these because I didn't pay GCT on them.
It is that
Morning.
You do pay GCT on them, you know, but what the suppliers are to ensure that they do is that the invoice that they should show the GCT portion that you're paying. But sometimes I realize what they do is just to write you just one receipt to show that you pay. This is the amount that you actually pay. That's how some persons actually do it. But based on, as you said, you're into groceries, most of those items would have been GCT items. Is it that you have just started?
No, I've been in operation over 9 years.
Over 9 years? And none of the income tax return was over 10 million?
No. Hello, sorry about that. I'm a little distracted.
Okay, that's fine. That's fine.
Yes, go again, please.
Yes, I was just looking in there. And how long have you been registered for GCT?
It's about 2 years now. I went to apply for my TCC and I had some issues at that time.
Okay. And you went to apply for the TCC at the office, and at that time you
they were telling I was told about the GCT, which I was never to my knowledge I would have been exempt from it.
Yeah, because if you are operating under the 10 million, then you ought not to register. And then unless you were you charging GCT to your clients?
No, I was not.
Customers?
No.
Okay. Well, you have a ground to actually, if you want to deregister because you're not earning, if you're not earning the 10 million, you can write and request deregistration.
Okay.
You can write and request a deregistration. Once you write for deregistration, ensure that you have your records, because you will be contacted to actually to ensure that your documents are checked to see that you are actually not earning that much.
All right, Mr. Nisha. Oh, she fell off. Oh, wow.
Yeah, as soon as if she fell off.
Yeah, she fell off.